you have to work hard at attracting and retaining good people. Good people have choices. There's a lot of good companies out there. So you have to differentiate yourself. You have to work at it. You can't take it for granted.
One path is a long, winding, unpaved, back-breaking, bumpy, miserable road to a place called success. The other road is straight, paved, smooth, comfortable, and that road ends up in a place called failure. Welcome to the show. I am Kyle Matthews on the Matthews Mentality Podcast, where we dive into the mindset of the world's most driven founders, CEOs, business moguls, athletes, and entrepreneurs. Each episode will turn our guests' wisdom into practical advice that will help you build a deeper understanding of what led them to success and the mentality behind what got them there. Let's get started. Mentality Podcast. This is definitely not a normal one in the Matthews Mentality Podcast. We're not in Nashville. We're in the Boulevard in West Hollywood with my longtime friend and somebody I admire very much, Bob Hart. He founded TruAmerica in 2013, serves as president and CEO. Under Bob's leadership, TruAmerica has become one of the most active multifamily investors in the United States. Bob is responsible for the national expansion of the firm's value-add investment platform. Bob, I'm so happy to have you here. Thank you for joining.
What a pleasure to be with you, Kyle, and to be here on a beautiful day. It
is a beautiful day.
In Los Angeles, right across the street from the historic Chateau Marmont.
I know, yeah. A lot of history there.
Yes.
So what are you up to these days? What's keeping you busy?
Well, the last 10 years has kept me busy.
I know that, yeah.
We've grown TruAmerica from zero to the 25th largest apartment operator in the nation.
What are the total number of units now?
We have 60,000 units approximately under ownership and management.
Yeah, and that's a big number.
Yeah, it's we span over, I think we're in 18 states and about 30 different MSAs with offices both west, east, and in Texas. And we have about 80 people now that are involved in the company day to day, and it's a busy business.
So 80 people. You started in Los Angeles, still based, headquartered out of L.A.?
Yes.
Offices around the country or mostly run from Los Angeles?
No, we have sort of a hub and spoke model. Our corporate headquarters is here in L.A., as is our accounting back office. But we deploy our acquisitions, asset management, our construction management regionally. So we have an operation in the Pacific Northwest that covers that region in the Mountain States. We have operations in Dallas, which cover Texas and the Midwest. And we have an East Coast sort of second headquarters, if you will, in Arlington, Virginia, and one in Miami, Florida, that covers the eastern seaboard, including the southeast, which we're very active in.
And what was the total number of projects now?
Total number of buildings?
Yeah.
We have over 200 buildings.
And how often are you able to get to the assets?
Well, I try to make it a point to get to every asset I can twice a year.
That's a lot.
Yeah, so it's a lot of traveling.
I hope you have a good rewards program.
Among other things.
Yeah. So many companies refer to themselves as apartment owners, but really you're in the business of being a housing provider, right?
I think so, yes.
And that's I think I speak for most housing providers. You want to be financially successful, and you definitely want, if not need, the assets to perform, but at the same day, responsibility of providing housing, 60,000 units and however many individuals that is within the units, it's a significant chunk of human beings.
Yes, it is. It's like several cities.
Yeah.
And the process doesn't stop once you've acquired the property. It only begins. I think owners and sometimes landlords are getting a bad rap these days throughout the United States, kind of following the COVID period. Yeah. But really, and I put myself in this category, I feel like we're trying to do the socially responsible and ethical thing by the residents. And, we're investing capital from institutional investors who are other hardworking Americans that are invested in their pension funds or through insurance companies. And it's circulating capital back to the housing stock of the country, which then supports the workers of the country.
It's like a circle.
It is.
Yeah. You touched on it. You beat me to it. I mean, you've accomplished so much, and TruAmerica is such a force of nature within the multifamily space and housing provider space. But if you don't mind, I want to start at the beginning. You grew up in Boston. If you could just talk to the audience or share with the audience, what was your childhood like? Like, kind of start your story.
Sure. I was a city kid. I actually grew up just north of Boston, on the other side of the Mystic River in a little hamlet called Chelsea, Mass. It was 2.2 square miles. It's the smallest city in the Commonwealth of Massachusetts, and you could see the Boston skyline from it, Logan Airport from it. And I grew up in basically a upstairs, downstairs duplex with my grandparents living downstairs and my parents living upstairs with me.
Did you have brothers and sisters? Or
I'm an only child.
An only child, yeah. Gotcha. And what was that like growing up in Chelsea?
It was kind of a little bit like the Hardy Boys, you know. It was we didn't have a lot of things. We basically had to be inventive with our recreational time, and all the things you would imagine the kids do in urban areas, playing stickball and riding their bicycles.
No video games at the time.
No video games. No fancy camps. None of that stuff.
Just get outside.
Get outside, and we'll give you a call when it's time to go home.
Yeah, just when get home before dark. What'd your parents do?
My dad was a U.S. postal worker
for
almost 40 years, and my mom was a housewife.
Got it. And I think you had shared the story with me previously. You drove when you were growing up, I think to make some money, you drove an ice cream truck. Is this?
Yeah, that's becoming urban legend. I needed to put myself through college. I went to a private school, WPI, in Worcester, Mass., and I got a partial scholarship, but I had to gap the difference myself. My parents really didn't have excess funds, and I couldn't make enough money working for somebody, so I started this little enterprise, which was basically a leased mobile ice cream truck that I ran through the projects of Greater Boston from about 11 in the morning to about midnight, from the time I got out of school in early June till the time I had to go back at Labor Day.
Share with us a story or two from that experience.
Well, there's a lot of great memories when you're part of a community and you're basically seeing everything at street level.
No pun intended.
Yeah. I mean, I can think of a lot of times when, believe it or not, you're not the only person doing that, so the competition is very fierce. So I could think of many times where you're trying to get to a baseball game or an event before someone else could, and getting into, I'll call it a competitive scrape here or there.
It's a metaphor for buying commercial real estate,
exactly.
Right? Yeah, it prepared you.
It prepared me.
I've known you to be one of, if not the most driven person, and just always going and always moving forward. Were you like that as a kid?
I think it became part of my DNA as I lifted myself up over the years and became more confident and engaged in entrepreneurial endeavors in real estate. So I think it's not something that I woke up with.
So it was more activated over time and developed?
Yeah. I mean, I was an only child growing up in a urban, tough neighborhood, so you have to take care of yourself, whether it be physically or just to get through the
mentally,
emotionally, the challenges of life. And I've always, fortunately, been very durable in my thinking and very positive. So I think life is a do-it-yourself program. You can read a lot of things, you can hear from a lot of people, but you have to have a certain drive within you to achieve something, whether it be in real estate or medicine or whatever field you're in.
In the conversations we have on this podcast, where we have what I call just very driven high achievers, and diving into the whys, but also the hows, how they did it, we're always kind of exploring the nature versus nurture question. And the nature side is like, was Bob Hart always like this, where your teachers would have said, oh, we knew he was going places? Or is it nurture, where kind of touched what you touched on, perhaps over time has developed and activated? What are your thoughts on that?
Well, I was always very academically minded and very civically minded at the same time at an early age. I was involved in, I happened to be of the Jewish faith and Jewish youth organizations that had a community service orientation, even at the young age of 14. So I was able to always incorporate, we'll call it extracurricular activity that was that kind of an outlet with academic study and working hard to get to the next level. And I've stuck with that my whole life. I've always tried to find time for giving back in some way.
Speaking of giving back and speaking of your Jewish faith, you had a significant honor recently. I think you were honored by the Jewish Federation.
Yes.
I know I was in Nashville, so I was not able to attend, but we had a big Matthews contingent there.
Yes, you did.
Talk to
Thank
us
you.
about that night.
That was a really great night. Yeah, I was recognized by the L.A. Jewish Federation Real Estate and Construction Council for my involvement, we'll call it, in humanitarian causes over many years, but also to raise money for the organization that provides a lot of community service and outreach and help, not just to the Jewish community, but to the broader LA community as well. And I made it my mission to, as I do with all fundraising efforts, to set goals that were very, very high. So we raised over $3.3 million through people like yourself that came out and supported us, frankly, despite some of their own challenges in the current economic environment.
Definitely within real estate, yeah.
Yeah. So it was a great moment. My wife and daughter and a lot of my family were there, and my daughter, who's 18 years old and who I thought was very shy, spoke in front of 1,200 people to introduce me. So it's a very, very proud moment.
And she thought you were pretty cool, huh?
Well, maybe for a minute or two.
Yeah, I bet. It was a cool night, and the guys were they said it was a beautiful night and very much a culmination of so much effort and energy you've poured in over the years.
Yeah, when I spoke to the audience, I didn't really talk much about my business achievements. What I talked about was growing up in what I called a hard scrabble town like Chelsea, in a lower socioeconomic environment, how important it is to remember that as you're achieving goals in your life, so that, frankly, you remain humble. And it's a reminder that there's a struggle, and at the end of that struggle, there could be some very nice things, but you're always kind of remembering, at least I do, that it wasn't always like that. And so it allows you to, I think, keep yourself in balance, if you will.
Yeah, and I would argue also it helps you find gratitude and perspective, in that, like, you know, I'd say a lot of us, you always want more,
right?
But if you keep, in kind of paraphrasing what you say, remember where you came from, and then you compare that to what you have at any given time. It's easy to find gratitude because you have so much more than maybe what you started with. Let's go back to that hard scrabble town. You're driving the ice cream truck. You're making ends meet. Talk to us about college, and I'm gonna kind of lead you here. In college, or even maybe before that, did you know you always wanted to get into real estate, or was that something that just happened organically?
Well, when I graduated with a degree in civil engineering from WPI, I had a lot of different opportunities to go in engineering, but I was very interested in real estate then, but had no clue how to get into it. No family background. You know, it wasn't like today where you could be academically trained and go into banking or management or brokerage.
Be an analyst.
So it took me about 6 years after I graduated college to make my first point of entry, and I did that after actually graduate school. I went to the Anderson School of Management at UCLA, and after that, I started investing in real estate. Is how I got involved with it. So it really evolved through a number of years, and really started with an entrepreneurial
Did you
endeavor.
go straight from WPI to UCLA with no time in between, or was there some work experience?
I worked for 2.5 years as an engineer, and that's what brought me to LA.
Got it.
I worked
Talk about that. Yeah.
I came to Los Angeles as a 22-year-old.
Not a tough sell at the time.
Yeah.
You go from Boston to LA. So all right. So that's the first deal. Talk to us about those first couple of years buying real estate. What were you identifying? How'd that portfolio grow over time? And then maybe one or two seminal moments, some big wins that you feel really, set you on your way.
Yeah. I mean, I was pretty scrappy. I was, how a lot of people start out just in residential. So I was buying single-family homes. I was buying fourplexes. And eventually, I started buying small land parcels that I was subdividing. So, and then building and developing larger homes in the Hollywood Hills. So, really, for the first decade or so that I had been an investor, it was really bootstrapping and really trying to put together a portfolio that eventually led to adopting my entire career into real estate.
Where were you finding the deals at the time? Was it like classifieds in the LA Times or?
A lot of that, some brokerage, and basically that's it, those two ways.
And would you drive streets and for sale by owner type thing?
Sometimes, if I identified an area I liked, but I think a lot of it really came through brokers and relationships. I was buying REO. I tend to do business with the same people over and over again.
Yes, as you do.
I'm loyal in that sense.
I appreciate that. All right, so you touch on it is doing some deals and starting to build a portfolio, and I think you had said kind of led you to choose focus on real estate as your profession. Talk to us about that period of time where you really became what I'll define as a professional investor. You said, this is what I'm going to do with my life.
Right. So for a period of years, I was working as a business executive while investing in real estate, because real estate sucks up a lot of cash.
It does.
So you better make sure you have enough income.
Asset rich, cash poor.
That's it. So I really learned the business not through the upside, but I learned it through the downside. So by the time I had accumulated a lot of entrepreneurial kind of small properties, we had the RTC crisis, which hit us in 92 to
the
94.
Resolution Trust.
The RTC, there was the deregulation of thrift and loans that preceded that in the 80s.
The late SNL thing.
Yeah, and there were a lot of SNLs that did not have strong balance sheets. They were not highly regulated, and they failed, which had a major effect on the real estate community. And in LA at that time, you had a huge amount of jobs lost in the aerospace industry.
Yeah, because was it after Persian Gulf won and then the fall of the Soviet Union? And,
exactly.
Yeah.
Or as I said to my wife, it's not my fault some guy with a little scar on his forehead decided to tear down the wall.
Was it Gorbachev?
Yeah, and then it was just a bad economy in L.A. And then you had the Rodney King riots, unfortunately, and you had an earthquake.
And you had the earthquake.
So there were a period of years where things were not so good.
And you got hurt. You could get hurt.
I got a little hurt. I watched my net worth go down. I had to learn how to do some workouts, and it was humbling.
Yeah, that's what we call hard lessons. You never forget them, but they're hard.
Yeah, and that's when I decided to pivot toward asset management and dispositions. And a friend of mine, who's a 30-year friend, who's been an co-investor with me, at the time he was working for the Executive Life Insurance Company, which had been seized by the state of California by then Insurance Commissioner John Garamendi, because they were heavily invested in junk bonds. And that was quickly coming to an end with the fall of Drexel. So there were a lot of these things going on at once. And
was it Drexel Burnham?
Drexel Burnham,
Michael Milken.
Michael Milken.
Michael Milken, yeah.
And they also made an example out of Fred Carr, who was the chairman of Executive Life, because he was a big investor in that. And the insurance commissioner has the powers of conservatorship if they feel the balance sheet or solvency of an insurance company could be impaired. So I came over when it was a trust to work on the real estate team and help them with both asset management and dispositions. And as a stroke of just timing and doing my job correctly, I ended up liquidating and managing the entire remaining portfolio that the company had, which amounted to about $1 billion of assets,
Of real estate?
of very large portfolios of real estate.
Across all product types, or?
Pretty much, yeah, across almost every product type, including securities and mortgages.
Yeah.
So that's where I really, in those intervening 4 years, really went from buying duplexes and land to liquidating companies.
It was a significant education for sure.
It was trial by fire.
Yeah.
And it was pretty political because you had different trustees who had different constituencies, whether it was the state of California or the insurance companies or the policyholders, and everything was under the watchful eye of the court system.
Got it.
So I really learned about compliance and legal authority and how to deal with partners, because they basically, when the insurance commissioner took over Executive Life, they were seizing control, and that control was also seized from the various sponsors that put these deals together.
So a lot of layers.
A lot of layers, yeah. That had to be deconstructed.
So you're liquidating this $1 billion portfolio. You're learning a lot across all product types. I know ultimately multifamily became your focus.
Yes.
But really learning, gosh, I can imagine retail, office, industrial, multi, the whole thing.
No industrial, but we had office, multi, a little bit of retail.
So, and as you liquidate, you're kind of liquidating yourself out of a job. What comes next?
Well, we all knew that. We all knew we were working ourselves out of a job, which was fine because there was an end game to it. So after you shut the lights off and you're nearly the last person standing, I knew that I continued to want to grow my career in asset management and workouts, but we were sort of coming to the end of that cycle in the late 90s.
Yeah, a lot of it had been cleaned up.
So I was recruited to the Chicago-based pension fund manager, Heitman Capital, in their LA office. And gentleman that had brought me there, little did I know, was really looking to find his replacement because he was moving on to another company. So I got involved at a time in Heitman where they were downsizing their portfolio. They tried to do a REIT roll-up, and it didn't work. And so they basically had to downsize a lot of properties that, for better or worse, maybe weren't performing the way they should. And so I was involved in a lot of large dispositions there as well, in addition to some fee-for-service asset management that we took on to work out properties that had been either taken
So again,
over.
you're managing dispositions and maybe not full-scale liquidation, but
orderly, more of an orderly
dilution.
process.
Yeah,
And that's where I really learned more about, the large commercial brokers, who's who, the right attorneys, again, taking what I had learned through the Executive Life process in a much more, bigger stage, should we say.
And so you're at Heitman?
Heitman Capital, yeah.
And how you're there for a couple of years?
I was there for a little over 3 years, and they were basically done with all that liquidation by the year 2000. There was not a lot of distress left, and the world was looking differently about real estate, and I had been continuing all that time to build my own portfolio.
Okay.
Yeah, side by side.
And were you still doing, kind of the smaller residential, or had you?
Yeah, mostly.
Okay.
Mostly.
I was going to ask, did you start to invest at least in the private side of more traditional multifamily 5 and 10 unit buildings?
That's exactly what I was doing. One of the reasons why I've never invested more recently in single-family homes is because I invested in single-family homes at a time.
You got it out of your system.
I got it out of my system.
Yeah.
And so I started investing in multifamily, exactly. And I did it with partners this time.
And were these friends and family, like your friends from the metaphorical country club, or was it, like just one high net worth family office? What was
it was friends and friends. No, I come from a very small family, so it was friends and people that trusted me.
That's a good point. How did you? Okay, so you have this career. You're doing these deals on the side. How do you have investors in these deals? You have friends. Are you having to do like monthly statement updates, sending them out, and investor calls? Like, how are you managing that? But still,
things weren't as sophisticated then. It was pretty bootstrapped. Most of the capital was ours. Maybe some came from third parties, but I don't remember ever having to do that. But I do remember when I finally got to 10,000 apartments, a friend of mine said to me, "How did you accumulate 10,000 apartments?" And I said to him, 10,000 Saturdays.
I was gonna say,
Yeah, so I used to spend a lot of time on weekends touring buildings, checking on things. I mean, it was really pretty direct. And I self-managed too back then.
You self-managed?
Well, I had I had people in the properties.
On-site, yeah.
Yeah, I had on-site people.
What if it was, what is it in LA? Is it under 16 units or over 16 you
over
have to have
16,
on-site?
yeah.
So if it was under 16, you had no on-site, you were the property manager?
Well, I had area people that
Okay.
were from
I was
other
going to say,
buildings.
like, toilet clogs at 2 a.m.
No,
Please
I
tell
never
me.
did that.
All right,
No,
okay. I was about to say, like,
it never quite got to that level.
okay. I was like,
But-
you don't sleep then.
No,
Yeah,
no,
all right.
that wasn't me.
Fair enough.
So I really built a kind of a small management company
Okay.
to as the portfolio grew.
And so, all right, you're building this portfolio on the personal side, and it's becoming significant. It sounds like kind of towards the late 90s and the early 2000s.
Early 2000s, yeah.
You're at the insurance company, then you go to Heitman, and again, correct me if I'm wrong, if I'm hearing you correctly, a lot of asset management and or selling and disposing, and in some cases full liquidation. What comes after that?
It was time to go on offense.
That's what I was gonna.
So by the year 2000, it was time to go on offense. And when I was, working at Heitman, they had spun off a portion of their company to what was then Kennedy Wilson in Santa Monica. They sold their property management company to them, and Kennedy Wilson in turn moved into the Beverly Hills area into the same suite of offices as Heitman. And this happened in the late 90s, so I got to know the folks there.
Share with the audience, who's Kennedy Wilson?
Kennedy Wilson is a New York Stock Exchange global real estate company that had its roots in real estate auctions, and is now a investment manager. They're active in multifamily, office, hotels, land development, and all sorts of things.
And so you had sold at Heitman, and if I had to guess, this is kind of where your relationship came. Or you spun off a property management.
I didn't. Heitman
Okay,
corporately
got
did,
it.
which caused Kennedy Wilson to merge their office space with the folks there, and that's how I met them.
That's how you met them.
That's how I met Bill McMorrow and some of my colleagues there. And Kennedy Wilson was not foreign to residential real estate, but didn't have an active apartment program. They did a lot of condos, and they were doing some apartments, but not on a programmatic basis. So when I came over there, I literally wheeled my stuff down the hall one day on a trolley.
Was that the conversation? Like, hey, come over here, come on offense. You've been asset management. You've been selling. Like, let's go buy.
Yeah, exactly.
Okay.
That's exactly what happened. It was pretty organic because I already knew the folks.
And so let me just push time out in terms of your career arc, and kind of go back to something you had said. It's how do you get 10,000 units, and you said 10,000 Saturdays. In the pursuit of achieving your professional success, it sounds like there was a tremendous amount of sacrifice. Yeah.
Yeah, it's just because of the way I chose to do it. Other people have taken different paths. I chose to wear a couple of hats at once. I was, on one hand, I had a job, which I needed to perform on. But on the other hand, I had this portfolio that was a living, breathing thing that I had to run.
I'm going to ask this question a couple times in a couple different ways, but the question is why? And it appears that you had this very good career, this asset management, and you're working for very reputable companies.
Yes.
If I had to guess, and not to share, it's, and probably had a nice life and style in terms of compensation from your career, yet, mornings, nights, and weekends, you're saying, hey, I need to do more. I want to do more. I want to build more wealth. I want to build this portfolio. I want to be more successful. Why?
I don't know the answer to why, but it was part of my DNA. Maybe because I'm a deal junkie.
So
I don't know.
That's the nature part.
I think it was in my nature. I like being an owner. I like being the guy who's has the deed in his pocket. I like showing up on site and figuring out ways to run an asset better or to improve it more. There's a certain personal satisfaction that comes with that, not because your balance sheet's getting bigger necessarily, but because you're really doing something that is tangible, that has good long-term benefits.
I think I read it earlier, your bio in terms of your titles at Heitman or, again, the insurance platform. And if there's 100 people with that job, 99 are like, hey, I have a good job, I make good money, I pay my mortgage, ideally I put some away, my partner, my spouse, my kids, I provide. But you're the one out of 100 said, but I'm also going to go do this. Mm-hmm. And that's why I asked the question why. I was trying to figure out those incredibly highly driven human beings like yourself is just, what is that motivation? Where's it coming from?
I grew up in a blue-collar, lower socioeconomic environment. My dad was a postal worker. We didn't even have a car.
Do you think, and again, whatever you want to share, it's some of the motivation might have been at the time financial insecurity?
I don't look at the cup half empty.
Yeah.
I look at it as half full. So to me, it was not just financial security. It was the opportunity to build something that could build upon it in a cumulative way.
Yeah. And a passive income also.
It wasn't so passive for me.
No, that's a good point. Yeah. Yeah, it was just income. It was active income, I think they call it.
Well, it was income and balance sheet growth, mm-hmm. because, apartments were growing in value and rents were rising and so forth. So it's kind of like a game,
Yeah.
But it's a real game.
I want to go back to, I want to keep moving forward, I should say, in terms of your career and talk about, you go over to Kennedy Wilson's multifamily platform acquisitions, right?
Yes.
What was the vision at the time? What was the mandate? Hey, come over and this is what we're gonna want to buy. What would that look like?
Yeah, Kennedy Wilson's a very entrepreneurial organization, and it was, buy, deals that we can make money on, basically, and do so in markets that we know. So, and try to do it with other people's money wherever possible.
That's good. And was it institutional capital or private capital?
Institutional capital, but not pension fund type capital or big insurance companies. It was more aggregated capital or opportunity funds.
Was it core product, core plus, like value add? What were you guys
I concentrated more on value add. During distress periods, we were able to buy some core product inexpensively, but my concentration has always been value add.
And what years were you there?
I joined the company in January of 2000, and I left in June of 2013.
Okay, so 13 years.
Yeah.
It's a long time.
13 and a half.
And through a full cycle, a real cycle.
To a very full cycle.
First couple of years, you went over there at acquisitions, but you eventually you elevated.
Yeah. What happened was there were a couple of us there. My colleagues would buy one deal, I would buy four. And the pacing of what I was doing was such that it really started to gel together and expand geographically. And basically I was appointed to be the president of what became a separate company called Kennedy Wilson Multifamily, and built up a team. So it was like having a company within a bigger company.
And what would you attribute your ability to buy 3-4x more than your peers?
I'm fearless.
Yeah.
I think that's what I always look at the
bright side of the deal.
I'm a deal junkie.
If the numbers don't pencil, you just kind of change some of the assumptions.
No. I didn't say I financial engineered anything, but I had a vision. I had a vision that they should become a bigger investment manager in multifamily. And
what were the markets you were focused on?
Well, at the time, we were focused primarily on Southern California.
Got it.
And San Diego and Orange County. And as we gained confidence and experience, we branched out to Northern California, where we did a lot, particularly in the East Bay. We went up to Seattle and Portland. and eventually to Colorado and Utah.
Okay, so Western U.S., but heavy emphasis in California, specifically Southern California?
Yeah, and at that time we didn't really buy Phoenix or Vegas or New Mexico.
Well, it probably helped you out when 2007 and 8 hit.
It did. We had a very well-located portfolio, but like everybody else in 2008, there were a lot of, which is very similar to what's happening now, there were debt rebalancing issues on short-term debt. And you also had a lot of, it's again very different than today. Today you still have a lot of equity in the system. You know, you've had the denominator effect, which has slowed down the flow of equity. Then a lot of equity providers, very large institutions, were not willing to write a check to rebalance debt because they were hurting in many areas of their businesses.
Yeah, there are not a lot of successful capital calls at the time.
No, and so to Bill McMorrow's credit, he took the company public again, and it raised enough capital to pair that capital with third-party investors, which gave us a lot of dry powder. And during that more difficult period of, call it 09 to 011, we were able to recapitalize a lot of real estate at really good prices from organizations that we were partners with that frankly weren't willing to do that.
And were you president at the time?
Yes.
And when did that happen?
I believe it happened around 03 or 04.
So yeah, it was pretty quick. Yeah, it was pretty quick.
A few years afterwards.
And where were you sourcing deals from? Was it direct from owners, was brokerage community, or
mostly brokers?
Brokerage community.
Mostly brokers.
And so I want to get back to, do you just buying so much more than your peers, same platform, same opportunity? And I know you said fearless, but was it just you were just working the brokerage community harder? You were pounding the pavement more?
So when I first joined, no one knew who I was in the brokerage community, because other than people that maybe I had been involved with on the distress side or the sales side. So my view was to identify all the top brokers in Southern California and go make sales calls on them. No different. Instead of them being the salesperson, I was a salesperson. And I would sell them on selling me deals.
That's right.
And that's how I did it. I've always had a close relationship with the brokerage community because I view them just like I view other principals or my investors. They're very much a part of the whole program, and without them, you wouldn't have any trade.
Well, thank you, Bob. We're people too, all right?
That's right, you are.
No. So, no, I know you're very you have very deep relationships in the brokerage community. We were just talking about a couple off air, but so you're president, the GFC hits, you're actually well capitalized, but also fearless. You're saying, hey, well, be greedy when others are fearful.
Yeah, but it takes a little while to get to the point where you see the other side. There was a period between, call it mid 08 to maybe mid 09 where things were really dark. And I told a lot of my young associates there to basically smile a lot and keep your head under the desk.
Yeah.
It was just a tougher time.
It was tough.
Yeah.
It was brutal. I was sitting in a cube at one of those brokerage companies. Luckily, I was, ignorance is bliss is the best way to describe me,
That's...
I was young, and
I started my first job out of college during the height of the with the Reagan era, when interest rates were 20%, 1980. But I didn't know any better.
Hopefully, we don't get back there.
I had a great job as an engineer.
I'll ask you about interest rates later.
Yeah.
All right. So from 2013, what did the portfolio look like when you got there? What did it look like when you left?
When I got there, it was probably under 500 units. When I left, it was 20,000 units. And it was across half a dozen states. It was a quality portfolio with properties with a lot of scale to them. It had lots of institutional investors, and the company had also been building a side business side by side to that in Japan. We had started buying apartments over there.
Oh, you did?
In addition to those that we were buying in the Western United States.
How did those do?
They did fine. I was part of that team that helped create that and really helped build the team there and helped with all the acquisitions there as well.
Did you, just a practical question, did you face challenges? Because on the multifamily space in Japan, especially with demographics, population kind of peaking and then potentially softening, was it a challenge to achieve rent growth out there?
Yes.
Yeah.
But what wasn't a challenge when we first started was getting 100% financing.
That's good.
And Japanese LIBOR was less than 0.1% at the time.
Wow.
So we were borrowing almost 100% of the deal at maybe 1 or 2%. And
cash on cash was like 12 to 15.
The renters there are very sticky. They don't move that often. And they don't require the same level of maintenance or supervision that they do in America.
So if you're borrowing at 1 to 2%, what were cap rates at the time?
7.
So your
portfolio in Sapporo at a
you
7.
I can't even do the math of it. What is a cash on cash when you're borrowing at 1, your cap rate 7, you
Let's
put
say 2. We'll put a spread on
2, cap rate 7, and you're putting 0% down. I don't even think there's a percentage to apply to that, but your yields are phenomenal day one.
The cash on cash yields were great at the beginning.
So even if rents soften, there's a lot of buffer there.
There's a lot of buffer there.
Interesting. And is that in the same bucket of capital as stateside, where your yields are much lower, but especially in California at the time, rent growth, outside of a little bit in the GFC, rent growth was material.
Rent growth has been steadily, other than the COVID period, 4 to 5% organically. But when you compound that over a 5-year period, that's 30%.
Yeah.
So, but if you look back, when I started buying apartments in, call it the Valley here, 1 bedrooms were $400. Today they're over $2,000. So there's always been a compounding effect over time of rent, but they were very, very cheap in relation to people's incomes.
I'm going to ask you about interest rates. I'm going to ask you about rents, especially in California and multifamily, given your experience. But I actually want to focus right now on 2013. You're at Kennedy Wilson, 13 years. You're doing great. Again, these are my words. You have a phenomenal professional job. It probably well compensated status and very comfortable. But then you go and start your own company, make yourself uncomfortable again. Why'd you do that?
It was a tough one. I was over 50 years old at the time, and I thought
you were still 50.
I wish I was. I had an investor who liked me, and I liked them. It was a large insurance company called Guardian Life, and they were an investor in my multi-platform as well as in Kennedy Wilson as a company. And they wanted to build their own platforms and become more of an investment manager. And after a number of years of investing with them, I saw an opportunity that they helped me recognize to do my own thing. And so I got up the nerve. It was hard to leave because I had a great group of people there, and I had a very strong relationship with the founder and leader, Bill McMorrow. But I knew that if I wanted to build a bigger company of my own, 100% devoted to multifamily, that I needed to do that in an independent way.
And you said built up the courage. Talk to me about that process. Like, what was going through your head? What was the time?
It was everything you said. I had a pretty good perch. I had a great group of people that I had built to help create this, company called Kennedy Wilson Multifamily. And there was no compelling reason to leave other than the one I induced upon myself to do it again, but this time build it differently and bigger.
Interesting. How'd those conversations go?
Which ones?
The ones when you said, "Hey, I'm going to go do my own thing."
Well, it was not an easy conversation to have with someone that still is a mentor, and after a while, it sort of sunk in that I was going to make a change.
Okay, so where'd the name TruAmerica come from?
Well,
I love these stories about the names. It's always, sometimes it's incredibly thoughtful. Sometimes we just threw a dart on the wall and it stuck. But
no, TruAmerica was cobbled together after 2 false starts. Naming a company is not so easy if you want to patent the name you have to have an email domain, and you have to have a legal entity. And the name of the company can't be the same as someone else who has a trademark name in your space. So when I started, I was going to call the company New America.
New America.
And after I started going down the road of New America with, the LLC and the trademarking, I learned that there's a company that a fellow named Andrew Farkas owns called NAI Commercial, and NAI stands for New America.
I never knew that.
No one knows that.
I didn't know that.
And I did not want to approach him about that, and so I quickly abandoned New America.
Then it became True.
Well, it became the next name. I'm a sailor of hobby, and the compass reading, True North, was what I called the company because it was,
Yeah, sure.
my hobby. So when I proceeded down the road with that name, I quickly learned that 2 Canadian companies were vying for that name on a U.S. trademark because they were going to go public. So they were vying for that name.
Yeah, you don't want to battle them.
Well, I said, maybe I will battle them. They'll never figure it out. But I quickly abandoned that after actually launching with that name. So I was at a party and with your like-minded folks in the brokerage community, and I said, guys, what do you get when you cross New America with True North? You get True America.
Yeah.
And you just drop the E.
Just
So that's
tried
how
it.
True America was
Very
born.
cool. Very cool. And then the domain wasn't too expensive.
No, we got the domain done. We got the thing launched. We got a website. We used GoDaddy. We did
right.
it. We did it on the cheap.
Good for you. Yeah, me too. How did the idea? Because you had run teams.
Yeah.
You had run a platform certainly, but how did founding, running a company differ from what you were doing previously, and what surprises laid in store for you upon founding it?
Well, it was a complete do-over. So I had to recruit people within the industry that I was in. I wasn't going to poach people from a company I had built up. And so I went out to recruit as I knew my transition time was coming and tried to find some of the best talent I could. And basically, that's what I did. I knew I was going to start somewhat modestly, so I started with 10 people. And I started with about $10 million of working capital, of which some of it was mine. And it went from there.
And what was your wheelhouse? What were you guys targeting?
Institutional Class B properties, similar to what I was doing at Kennedy Wilson. But
So you're able to leverage a lot of the relationship with the brokerage community, the deal flow,
Yeah.
perhaps day one was pretty
I
good.
mean, and again, and maybe I never take anything for granted, but what I thought maybe was that, my brand was closely tied to the company's brand, and it might be hard to relaunch under a new name and a new brand. And I found out that it wasn't so hard.
Outside of the updated email address, yeah.
That people were relying on my judgment and my integrity.
And if just speaking from a broker's perspective, regardless of whether you're at Kennedy or at this new company, TruAmerica, if you get under contract, barring a surprise, you're going to perform.
Well, that's the whole thing. One of our internal mantras at TruAmerica is that we transact in relationship capital. We do what we say we're going to do. We're not involved with, grinding people or retrading or any of the things that, are not so nice about our business. So we try to build deep relationships, and we try to do that by working hard. When we are out acquiring real estate, we really make sure we know the markets they're in, we understand the demographics, we understand what's going on with the actual piece of real estate, so that as we move through the process, there's good people. good people have choices. There's a lot of good companies out there. So you have to differentiate yourself. You have to work at it. You can't take it for granted. So you need to put incentives in place, benefits in place, give autonomy to people, create, younger people want elevation of title
very quickly.
Very quickly.
They always come in and say, "Hey, Mr. Hart, I just want to say, like, titles are important to me, okay? But I'd like a better title."
Yeah. And I'm going to take next Friday off, by the way.
Hey, can I work from home?
Yeah, can I work from home? You didn't know Fridays were the new Saturday, did you?
Yeah, we're as I said, we're now Europe. Can I bring my dog in the office?
That's right.
Do you have pet insurance? It's part of my comp package.
Yeah,
but I don't want to affect my comp. No, I know. It's every generation has unique talents and quirks.
It's about recruiting and retaining the best people. And then in our case, we grew like an internet company. We were growing like about $1.5 billion of assets a year.
Yeah, fast.
And some people can't keep up, unfortunately. And so you have to work at building a culture where there's a balance between growth and training and retention. But you need the right talent to do that.
Yeah, I had a conversation yesterday with a business owner, and he said that same thing. He said one of the hardest things has been the company has grown at a good pace. And he goes, some people grew faster than the company, and we couldn't service their desire to grow within their career fast enough. And he's
had
like,
folks like that too.
But he said a lot of people just couldn't keep pace with the growth and evolve their skill sets as the company's skill set needs evolved. And
well said.
And it unfortunately some relationships are lost or resentment, and TruAmerica grew very fast.
Yeah, but we never wanted anybody to go away mad.
Yeah,
and I think we've created a pretty good culture. We have a lot of friends in the business, a lot of people that maybe are not there any longer because they've either formed their own companies or they've moved on to something else, or our friends.
The Bob Hart coaching tree.
That's what it is.
You're like the Bill Belichick of multifamily.
Wow, that's very nice of you to say.
How much gas left in the tank? What does the future look like for you?
I think the future looks great. We're working on taking the company to another level. We're a national company now, but we'll be even more of a national company over the next 5 years as we go deeper into places like your adopted hometown of Tennessee, into the Northeast, into the Pacific Northwest, where we already have a footprint, but we're going to deepen our businesses.
To really saturate.
Yeah, I call it building businesses within an industry.
Sure.
And through that, you need to build up people in those regions that have the skill sets, have the autonomy. We're also diversifying our platform into other areas of residential ownership and building that out as well. And we'll do that over the next 5 years to create a more diverse company. So
you're just gonna keep grinding, keep going.
I'm going to keep going until I can't keep going.
Is that what it is? Like you're just going to keep going until you can?
No.
No, I was going to say, is there a date? Is there a milestone? Is there a number for the company where you said, okay, I'm good. I've accomplished what I need to accomplish at TruAmerica, and I'm going to go do something else now?
No, I don't plan to do anything else, but I do plan to eventually slow down a little bit and maybe move into more of a chairman-like role, but not yet.
What does slowing down look like for Bob Hart? I can't imagine this, so you have to paint the picture.
I'm afraid to even paint the picture myself, but it probably would involve doing more nonprofit work. I serve on several boards, so I'd probably be able to spend more quality time in doing that.
Do you have any hobbies outside of philanthropic work? Any hobbies that the audience should know?
I
play golf. I don't know.
I do play golf. I'm a member of a couple clubs, but I'm not a very good golfer.
Yeah. It's because you've been working too much.
That's right. I used to say I was a golfer by invitation.
I always say, Bob, don't trust a broker with a low handicap. You can't be working too hard.
That's true.
Don't let them tell you that they are.
My greatest passion is sailing. I have a beautiful sailboat that I sail in the ocean here in the Pacific. I enjoy the water. I paddleboard, and I like
you and McConaughey and
oh sure, yeah, he calls me all the time when he wants to paddle.
Anthony Kiedis down in Paradise Cove.
Yeah, the whole crowd.
Point Doom. I know. I need to get out there with you and Laux. So paddle boarding, play a little golf, cars.
Cars. I have a passion for cars.
That's cool.
My first car, well, not my first car, but well, it actually was. It was my first car was a '65 Ford Galaxy 500. My second car was a '68 Pontiac GTO, of one which I own today. Not the same one, but a different one. So I've always liked American cars from the '60s and '70s.
Yeah, me too. I'll wrap up with. I do want to talk more about your charities and the energy you put into that. But let's talk a little real estate real quick, okay?
Yeah.
What's going on in the current market? What's your opinion on what's happening? The interest rate hikes over the last 15 months. On the brokerage side, the velocity decline in transactions. Like, what are you seeing out there? Where do you think we're heading?
Well, what you have, you had one of the greatest, quickest spikes in interest rates in the history of the country. Even, I think it was even at a greater pace, or as great a pace as what occurred in 40 years ago in the 1980s under Paul Volcker.
It's just under 81, so it's 42 years, the greatest in 42, and even then, what Volcker did, I think it was in 81, because he raised it up, then he dropped them, and then it came back and he raised it up big, and that second raise was technically, it was higher than the one started in last year, but it was tough.
Yeah, I mean, look, it doesn't help asset values, okay, but you have to look at what's good for America, and what's good for America is not to have high inflation. We've created a lot of jobs, and incomes have gone up, which is good for our business. But at the same time, you don't want to be like Argentina, where your mortgage is at 30% or you can't even get one. So the United States economy is very strong. When you listen to folks in the morning on CNBC, the right ones will tell you that they think the economy has a lot of legs to it and it's very strong. I heard Larry Fink the other day, heard John Gray. He was a little more tempered than he normally is, but I'm optimistic. I'm optimistic about the future.
So you think there's a possibility for a, let's call it a soft landing, where the economy doesn't go into a recession, but inflation slowly floats back down to earth?
I think so. I mean, I'm not an economist, I can't tell you, but I think what's going to happen in our business, which I think interest rates will normalize soon. I think they'll be at levels that make more sense.
Can you define normal?
4.5% to 5% fixed rate loans, which is.
So do you think that we get there by way of the Fed, for whatever reason, slowly bringing it down, or spreads tightening? How do we get back down there from?
I think it'll come from
mid fives to mid sixes right now.
I think it'll come from, the Fed bringing down the cost of money. I think cap rates will start to normalize also. I mean, 3.5 caps were not normal. If you really look at cap rates over a long period of time, even coming out of the great financial crisis, cap rates really didn't expand for very long. There were deals trading for just a brief period of time in the 7s, but it was...
Yeah, it's just such cheap capital, such cheap borrowing costs
cheap
for
borrowing
so
costs,
long.
And there's so much equity in the,
global
global
system. Cheap equity. I mean, people talk about right now with the asset level debt increasing so much, which it has, but the cost of equity, cost of LP equity has gone up significantly in the last 12 months.
Yep, but I think this will also serve to, unfortunately, shake out the less capitalized, the less sophisticated, the less capable sponsors of real estate deals that, are not prepared for this kind of situation.
Yeah, who was it said when you could tell who's been swimming without their shorts on when the tide goes out? What is it? It might be Charlie Munger. I can't remember, but
probably.
But yeah, the tide's going out right now. The same applies in the brokerage space, and just like on the principal side. So you anticipate rates going down over the next 12, 24 months?
Yeah, we might get a few more hikes in between, but I think they'll start to normalize.
I hope you know something I don't. That would be lovely.
Yeah, we shall see. I think sitting on the sidelines is not a great idea. I think I've always been an investor across cycles. I've bought and sold during, different cycles. Obviously, when you're in a very low period, it's very hard to be a buyer. But I'm in it for the long term.
What advice would you have for someone listening who is thinking about starting to invest or becoming an investor, much like you, 30, 40 years ago when you bought those 2 homes in Venice? Like, what kind of high level advice, and then maybe what practical advice from an investment perspective? I recognize you're not a financial advisor, but how would you encourage someone to get started?
I'll tell you what I tell young folks that ask me that question. Put some skin in the game. Nothing can create a more visceral reaction than when you have your money at risk. Find a piece of property you like, or find someone that you want to co-invest with, or something you like, and go do it. Go make that investment if it's something you believe in, and then manage the hell out of it.
To piggyback on that, as it relates to multifamily specifically, because that's your focus, I always say, look, one of the best ways to get into the investment side of commercial real estate is a 2, 3, and up to 4 unit apartment building.
It is.
It's because you could get homeowner financing, because the banks consider that up to 4 units, consider it a primary residence. So you can get that higher LTV, and then if you're buying a 4 unit, you could have 3 of those units. In some ways, subsidize the mortgage. It may or may not cover it all, depending on what market you're in. But it is a way to get into it, and you live there for 2 years, and ideally, if you can turn some units, push some rents, make the building a little more valuable, and then you live there for 2 years, you get that $500,000 exclusion, which is great. I always say, if you want to be on the multifamily side, that's one of the best ways to get in with because a lot of people don't have $1 million lying around,
no.
But 50, 100 grand, again, not in LA, but in a lot of markets throughout the US. Like even Nashville, a 4 unit is maybe not Nashville, but Murfreesboro or Hendersonville. Like it's still somewhat affordable.
A lot of the great fortunes were made from a duplex. They started that way.
Yeah, or 2 homes in Venice,
or
right?
2 homes in Venice.
You don't still own that, do you?
I wish I did.
You should go back and buy. Just walk up and just say, hey, like whatever you want for it.
It's still there, and it still looks the same.
That's LA, Yeah, I'm sure it's been tried to be developed 10 times, but the NIMBYs. I want to talk to you about California.
Yep.
And I obviously used to live here, but I was traveling all across the country, so Nashville was a perfect spot for me to land. But we have heard about people leaving the state, cost of living being a big driver, obviously some politics too. What are your thoughts and opinions, without touching any sensitive topics, about being a housing provider in California, but some of the messaging coming from the politicians where they might not look at you as favorably? How do you manage that as an owner?
It's very challenging in California right now, but you can't indict the whole state. What's happened is COVID has had a dramatic effect on people's perceptions of landlords. Landlords were treated as pariahs during COVID. They weren't treated as heroes.
Yeah.
And a lot of the protective mechanisms that were put in place by the various cities and city councils didn't have a counterbalancing benefit to the landlord. And as a result, there was a lot of government programs to help people pay their rent that needed it. Some people abused that. Some people have gamed the system. And unfortunately, there was a price to be paid for that. But a lot of the laws that were put in place at the state and local level continue to penalize the landlord and create a disincentive for new investment. And that's not going to solve the housing problem.
And I know you have relationships with a lot of these politicians, just haven't been active in California. And are they receptive to that Were they receptive to that conversation?
Not here in Los Angeles or San Francisco.
Now I know why you're buying in Nashville, right?
No, but I'm buying a big deal in Orange County right now, and I love San Diego, and I love Los Angeles, but you can't tax someone at 5.5% when they sell. And you can't...
The mansion tax?
The mansion tax.
When they first came out with it, I always say I'm an idiot, so I thought they meant mansions. But I guess multifamily is a mansion too. So
Well, it's just a street name they gave to it. It's really talking about real estate as a whole. I mean, what we need to do is encourage more development and more workforce development to benefit the consumer.
Look, I mean, their two biggest motivations is we need more homes and we want rents to go down. And I'm a simple-minded real estate guy. The best way to do that is let them build.
Let them build. I think what we want to do is let rents normalize, and we want to create more housing choices for people. You know, in many cities, people have to commute a long distance because they can't afford to live near their jobs.
Yeah, it's tough, especially in LA. I was sitting on that 405 today. I was like, man, I didn't miss this.
No.
That's why you got to get a helicopter. But this is why you got to run for mayor. You got to run for governor. Come on, you win.
I used to have those aspirations, but it's
well, you need to get back in that game. All right, I'm gonna start the campaign right how you heard it first on the Matthews Mentality podcast. Bob Hart for mayor. When's the next one? Is it 2024?
Yeah.
All right. Well, I'm gonna be your campaign chair.
Thank you.
I will get you 0 votes.
You can't vote here either.
That's right. That's right.
Yeah.
All right. Let me ask you this: what is a piece of advice that you would have for listeners to achieve whatever it is they think they want, but achieve what they want, either personally, professionally, in life?
My advice when I talk to young folks, particularly those that are quickly finding dissatisfaction in what they're doing, is I ask them to reflect a little bit and think about what they can do to make their companies better, their lives better, their families better, and their community better, rather than just looking for the next rung on the ladder. So it's about sticking with things and growing not just yourself, but the organizations that you touch and you're a part of, so that you can feel like you've accomplished something. So I think there's a lot of mobility, but sometimes too much mobility doesn't harvest the skill sets necessary to grow in a profession if you're constantly just jumping around.
And I want to tie that into really the overarching topic we touch on, which is like a mindsets and mentality. Is first let me ask, like, how would you describe your mindset, your mentality, and your approach in life, looking back?
When I look back, I've been working for a long time, over 40 years. I think the thing that has always defined my mentality is finding the cup half full, not half empty, and trying to go above and beyond my immediate job to make a contribution to the company I'm with, or to the partnership I'm involved in, and to also find some balance through community service and other things. And satisfaction isn't something you're born with. You get that through taking baby steps over time.
Yeah, which sometimes can be a challenge for impatient people.
Yeah.
What because I'll get to fulfillment and satisfaction at the end, but if you had, how would I ask this question? If someone were to describe Bob Hart, what would be the best compliment to you in terms of someone telling someone else about you, someone describing you? Like, how would you like, whenever you, whether it's today or 5 years from now, whenever you're retired, looking back to say, hey, this is who Bob Hart was as a professional, as a person, how would you like to be described?
I think I'd like to be described as someone who, through his own efforts and his own achievements, influenced my life and my career as a mentor, whether it be as a career mentor or a civically minded mentor, someone that had an open door to others, who was willing to help others in thinking through, their life's mission, and being a person who gives some kindness and some consideration to everybody.
So through your effort, positively impacted a lot of people.
I think so.
So I'm going to wrap this up. I want to talk about positively impacting people, which also kind of gets to the question I want to ask about today. What brings you fulfillment and satisfaction is, let's talk about, we've spoken a lot about multifamily, about TruAmerica, about your professional career. Talk to us about your philanthropic pursuits.
Yeah, I have a couple different passions. I'd like to see the end of the scourge of homelessness that pervasive in Los Angeles get under control. And I've been very passionate about an organization for the last 25 years called Chrysalis. Yeah, who through direct efforts in the community in Skid Row and in the Valley and Orange County and the West Side have a sanctuary for people emerging out of homelessness to teach them how to be self-sufficient and find a job. And the more we can do things that are directly impactful, that will solve a problem like that or reduce it, the better we're all going to be in our community.
Are you, and is this or this city, seeing progress with the homelessness?
Yeah, I think the skeptics would say no, because it's been such a high incidence, and a lot of homeless people come to LA, and unfortunately there's a lot of veterans that are homeless. We've been fighting wars in the Middle East for 3 decades. It creates a lot of PTSD and a lot of homeless. But this was a very difficult election for the city of LA. Rick Caruso and Karen Bass.
Yeah, it was close.
It was a very close election. Karen Bass won. I think she's doing a pretty good job of trying to tackle the homeless problem. She's trying to get it under control. She's buying up various buildings and motels and getting people situated in them. There's been less visible tent cities, but we have a long way to go.
I did notice that the last 2 trips out to Los Angeles, because I'm going between offices and I spend a lot of time on the freeways and getting off at the off ramps, which normally is where you're going to see a lot of them outside of downtown. And I noticed it was a lot less the last 2 times.
Yeah, it's a public health crisis,
yeah.
And we have to be able to let the folks that are taxpayers or renters or tourists be able to enjoy public assembly on the street. And if you have a lot of homeless people and you have petty crime and you have police that are afraid to do their jobs,
fear of violence, and
it's not a
because you touched on it earlier. So a lot of the drivers, that's drug use and mental illness, and so
you want LA to look like Hollywoodland, not the scene of Blade Runner.
This is true. It was trending that way, but it hopefully appears.
I think it's turning. I was in Seattle
Yeah.
recently. It's turning.
Yeah.
I think there's a realization that the heavily progressive policies of these major cities have backfired a little bit,
Yeah.
and they're not actually helping those they were intended to. You can't have open drug use on the streets. You just can't do that.
Yeah, and you can be compassionate,
Yes, you can.
but also still say, hey, we still need a functioning civil society.
You need a functioning civil society.
Yeah. What else in addition to Chrysalis? I know you're involved.
Well, I'm involved in a lot of different organizations. I'm involved. I have an 18-year-old daughter that just graduated from the Marlboro School for Girls. I'm involved with that school that's been around since 1889. I'm on their board of trustees, and I care about education. I care about education of young women to achieve things, and that school does a lot to promote that in Los Angeles. I care about science and technology. I'm on the board of trustees of WPI, where I went to college, and seeing the mission of that school grow and achieve great things.
Yeah, you've always been just so generous in general, obviously, with your philanthropy, but also with your time.
I try to be.
I used to cold call you, and you're kind enough not to hang up, so I appreciate that.
I don't do that.
No, you're very nice.
But you're a very hard guy to hang up on, though, Kyle.
Yeah, well, because I'll show up at your door, and eventually it's like, look, I'm not going to go away. So,
no, you're
you're
ubiquitous. You're everywhere.
That's right.
The other organization that I care deeply about is the City of Hope here.
Yeah, that's what I was going to ask about.
Duarte. They do remarkable things for people, and they're doing God's work there.
Yeah, literally. All right, Bob, that's it. I mean, I can't thank you enough for taking the time, and it's a remarkable career that you've had and continue to grow. TruAmerica is an absolute force of nature in the multifamily space. I mean, you want to talk about ubiquitous, you guys are everywhere, and I just heard you're going to be in more places and buying more deals, which doesn't surprise me. And it's not just you, it's everyone on the team over there. You have such a great culture.
Thank you.
Your guys, they work hard, your guys and gals, but they're fun hangs. You know, they really are. I love seeing them. I love seeing you at the conferences and NMHC and all the shows, and that's always been a joy. But again, thank you for coming on. Thank you for sharing time. Appreciate you sharing, your story, and also, your mindset and how you approach that. Because it's true. This is my opinion. You've had. There's a lot of times in life where you had achieved something, and almost everyone else would say, "Hey, I'm good with this," and you just kept pushing and pushing and pushing. So I've always wanted to take time to dive in and understand like why, and so I appreciate you sharing that with me, and it's been fun hanging. I can't wait to have you out in Nashville. Come out to the farm.
I'm looking forward to it. Actually, you'll have to teach me how to ride a horse.
I don't know how, but I got someone who can help you. Thank you, Bob.
Thank you.
Good to see you.